Good afternoon, my name is Jordan Lambert, market analyst at Gelatama Management. So the bears lost market control yesterday and have so far today, as the bulls have said enough is enough and pushed this market higher. Today we've seen a rally from around 12.34 up to a high of 12.55, supported by Chinese inflation data in the form of the CPI. CPI for June was higher than May's CPI and also higher than what was estimated. So this helped gold push higher, and also this rally that we've seen today has been triggered by a bearish trendline break. Alcoa, the largest aluminium producer in the world, has kicked off a second quarter earnings season, topping analyst estimates. But the main focus this week will be JP Morgan's earnings results on Friday. They are due to report before the open of the US stock market, so watch out for that. Now the market seems to have fully evaluated and accepted the Fed's intention to reduce stimulus, which has changed the reaction to positive data. Earlier in the year we saw good data cause stocks to react badly, and this was due to the threat of the winding down of bond purchases occurring sooner rather than later. However, investors have now come to terms with such an occurrence, reverting market dynamics back to the norm. So this week and this earnings quarter, for the second quarter, the US banks will be in close focus due to the close correlation with the overall US economy. So this should give a good forward outlook to see whether the US is still going to continue making progress, and whether that 6.5% unemployment rate is within sight. Let's just take a look at the charts. Just taking a look at the 4-hour chart here. I mentioned earlier that we had a bearish trendline break. This occurred this morning, and it was around, let me just get my cursor, it was at 12.44. So we can see, if we get a closer look at that, we can see as price, we had a mini false break there, but it attacked it again, and we saw a real push through there. And this was supported by earlier Chinese inflation data, as gold is a good inflation hedge. So we saw a trendline break there. If you are still in this trade, if you saw this trendline break and you bought at 12.44, a possible target level would be 12.97, about here. I've calculated this by just working out, measuring the distance from the last downward leg of the bearish trend from 1260 down to 1208, 1207, and then just using that as a possible target level from the break of the trend line here. So this was the distance here of this downward leg of a bearish trend, was around $53. So my target level from this break here at 12.44, $53 high is 12.97. But be aware that there will be some headwinds along the way. We have potential resistance at 12.59, at 12.67 as well. So it might be worthwhile using a trailing stop loss. Potentially you could use the ATR. I'll just show you what the ATR is. This is the ATR, very useful if you are in a position that is trending well. You can just find out what the ATR is. It's currently on the 4-hour chart. The ATR is currently $9. So you could times this by 1.5 or 2 to work out what your stop distance from the current price should be. And as price moves up, you trail it up that distance away, which would be 9 times 1.5. Call that $13.50 away. Or if you zoom into a shorter time frame, the ATR will be smaller, so you could have a shorter trailing stop loss. So if you did miss that trade this morning to buy at 12.44, don't be too concerned, because we do have another potential setup to go long. We have a double bottom forming here. This is the first bottom, a rise, and then we've had a lower high, and the neckline of this double bottom sits at 12.67, which was last week's high. So if we get price continue to advance and complete this neckline, it could be a good time to buy. Look to see if we get a bullish Maribozu breaking through this trend line, this horizontal yellow line, which illustrates the neckline of the double bottom. If we do, then go long, because it's a classic double bottom reversal pattern. However, traders looking to short could look to could look for a pivot trade to sell at this level to look for a bounce. We also have minor resistance at 12.59. So again, you could look to short. If your bias is bearish at the moment still, you could look to short at 12.59 or 12.67. If you are bullish, if you are in the trade since 12.44, look to target as high as 12.97 with a trailing stop. But if you are not in a long trade at the moment and you are more bullish than bias, wait for the double bottom to complete here and go long. The stochastics is on the overbought territory, but it hasn't turned yet. So if price stabilizes, this stochastic will drop down. So then it will give it more space to advance again. So main events this week, we have the UK manufacturing production, that is at 9:30 AM GMT. Today we have Ben Bernanke, the Fed chairman, speaking Wednesday night. The early hours of Thursday we have the Australian unemployment rate, and then on Friday we have a US consumer sentiment number from the University of Michigan. So they have the main events, quite a busy economic calendar. Again, every economic number that is released will have big importance, because it will just give more evidence of when the Fed will likely reduce its bond purchases. So that's the data today. I hope you enjoyed the analysis, and trade carefully, and I'll speak to you again tomorrow. Thank you.